G'day guys, welcome back to the channel. Hope you are all doing well out there. Busy week as always, loving it at the minute. Little bit happening on the Bitcoin front, so let's get stuck right in. Few sort of macro things to just quickly discuss first, just to set up certain discussions. But let's get right into a little video here of a really interesting gentleman. This is President Biden, not President Biden. This is Obama's old chief of staff, I think, chief of staff. But I guess what this discussion is really about, this guy is a high up unit. They called him one of the most influential players that no one really knows. So I guess what I'm trying to say is Bitcoin is infiltrating every element, every layer of society, whether we want to believe it or not. I know we're in our own little echo chamber from time to time, but you've just got to remember that the incentives of Bitcoin will get everyone in the end. I guarantee it. They're going to get all the businesses. They're going to get all the governments. It's going to get all the individuals, unless Bitcoin is separating their business from what it does, is like credit union. Those folks aren't going to be incentivized to do Bitcoin, but the number go up technology alone is enough to get lots of important folks in. So let's just hear what this guy has to say.
We've got, crypto. Some people are loving it. Some people are hating it. They say its time has passed and all. Where are you on this? Obviously a big, proponent here. Right. Where do you see it going?
Look, I think blockchain and crypto is one of the most exciting developments in our lifetime. I think when this is all over, we're going to be known, this generation, for COVID and for reimagining our financial system. I'm incredibly bullish on this. I think it's good to have a crypto winner, getting rid of some of the BS projects that are out there.
Bitcoin itself?
Look, I'm bullish. I'm buying Bitcoin right now. I think, anything.
So in and around $20,000, can it ever get back to 60 some odd?
Oh, I'll bet you my Porsche gets back to 60.
Really?
Yeah.
Okay.
Absolutely.
Life truly is good if you have that to bet. Jim, very good seeing you. Thank you very, very much. Predictions?
So old Messina there, he loves it. He's willing to bet his Porsche on the price going back up to 60. I mean, it's obvious at this stage that that's going to happen. We've been talking about this for months on end now. I think the last low now was put in 130 odd, maybe 135 days ago. So that's a long time when you think about it. And this is exactly how this is exactly how a bear pattern looks in the end. It just takes time. The thing with Bitcoin is it's a slow game, very slow game. And it just requires discipline and patience and understanding about what you're holding, and you can't really go wrong in the long run. Well, so far you haven't been able to go wrong in the long run. Nothing's certain, I know, but gee whiz, it is, all these stars are going to align on the bottom of this cycle. I think near the end, it's shaping up beautifully. I'm loving it. So this is just a little non-Bitcoin discussion. So I'm going to relate it into Bitcoin, however, because what the narrative for Bitcoin was that it's an inflation hedge, and that was never really the case. It was always and is very much a hedge against monetary debasement. So what that means is when new money units are going into the system all the time, loosely, Bitcoin's got to fly. When they're coming out, like they are at the minute, Bitcoin has a bit of a harder time. Now, that won't be the case forever, but at the minute, that's exactly how it's operating, and that's obvious, I think, now. But if you look at this comparative here between 2008 and 2022, you can see here globally how much lost value there has been in the world. $92 trillion of lost value. I mean, this is insane. Now, this obviously isn't paper, as in this isn't realized value, but people still are losing this effectively. This is the value of everything. So you can see the difference here from 2008. 2008 wasn't friendly for anyone. So this has been a big hit so far, and we don't really know where it's all going to end. Whether we're going to have a little melt up now into Christmas, and then 2023 is going to be really tough. I just think people are underestimating the damage that high interest rates are going to do to consumers. Consumers are way too over levered. The leverage desire, or the desire to have leverage, which is houses, mortgages, for average folks that aren't into Bitcoin, that the loop, the catch, the dream, the societal norm, the propaganda, the whole shebang, everything is about your house, and that is all dead, all fucking dead. The whole thing is dead. So, look, it's just going to be a tough 2023. I think folks are going to be selling. They're going to have to sell, but let's see how that pans out. So this is a really interesting chart that I had to put in quickly as well. This is the interest payments from the government. Now, what's going to happen here is if rates go up to, I think, something like 5.5 or 6% in the US, this number is going to go over $1 trillion. That's the interest payments per annum. $1 trillion in interest. So basically, that's the end of the game, because the military-industrial complex, the interest payments are going to cost more than the life structure, the payments for the military-industrial complex. And this doesn't even start to talk about unfunded liabilities. So, the government and the government's in a rock and a hard place in America, as is the rest of the Western governments, and actually most of the governments around the world. So, I think they're just going to roll out the printer. They're going to have to, and whether this is going to be a concern to them or not, we won't know until that happens. And it's getting a little bit difficult to try to make judgments on how things are going to fall, but that's something to consider. That is a frightening number of interest payments. So onto the Bitcoin chart now. You can see we are really, this is a 2-day chart, by the way. You can see we're really starting to sort of build this base. Now we've hit this 18 or just under 19, I should say, level sort of 4 or 5 times now, and I want to believe that it's a good, strong base, but who knows if it's gonna if we're gonna get a sort of a swan event that knocks out liquidity. But I think in the end, 19, 20, 18, whatever this sort of bracket is that we're sliding between, let's say 18 and 22,000 US. This is an incredibly high level of value comparatively to where we were not long ago. And I think everyone tends to forget that this thing, Bitcoin is doing per annum, or so far this year, it's done $57 trillion in settlements. $57 trillion in settlements, the Bitcoin network. I mean, it's out of control. It is fundamentally booming. Users are booming. Everything's booming. The whole thing is booming, but the price just isn't indicating that at the minute. That's because no one understands what the hell it is, quite frankly. No one. There's such a limited of, I reckon, 1%, let's just say 10% of people, let's just say 1% of people hold it in the world. Probably that's a little bit low, but let's go with this. Then maybe 1% of that 1% even fucking understand what the hell it is, or how it works, or anything. So the knowledge level is frighteningly low, and it's really up to us or anyone who understands it to help explain things in a simple way to wrap people's heads around what this is. It's a different paradigm, and it is, you just have to take your mind out of the norms and you put it into this Bitcoin land, and it really opens your eyes up to some stuff. So, let's hope that we have found the bottom. As I've said for a long time now, picking up under 20 US, I think, is a good place to be DCAing. I know I've been DCAing there, and if we go back under, I'll be DCing again. So yeah, I'm loving this price action. What people are starting to feel though, and what I'm a little bit concerned about is this sentiment. It's exactly what I just said to you, where everyone who's been in this for a little bit is sort of in the same mindset. And what can happen in that phase is exactly what happened with these liquidations. People start to try to guess the market, because obviously with derivatives there is big money available in returns, big gains possible. And just last week when we had our pump, there was not record shorts, but there was a lot of shorts, and they all got liquidated, of course. And that was $171 million worth in 1 hour. And that's a big number. If you look at the chart, you can see that the red candle there, comparatively to the rest of the volume there in the green and the red, it is enormous. So I don't mind shorts getting liquidated, of course, because a lot of Wall Street is using derivative short Bitcoin to cover off their shitty NASDAQ positions and some of their really weak, what's going on here, bear with me, okay, covering off some of their really weak NASDAQ positions and their tech stocks. Their tech stocks are getting crushed, and so they're using this short to cover themselves as a hedge. Now they're going to get wiped in the end, and this is going to happen again as we start to do these bullish momentum runs. Bitcoin's going to launch, and by God, it's going to launch hard when it goes. So keep yourself strapped in. Now, we were discussing last week a lot about the miners, and since that video, we've had a big capitulation or a big crisis in the biggest Bitcoin miner, it turns out, which is Core Scientific. Now, they've come out of nowhere, quite frankly, and they used a ton of leverage to force their way up and buy an absolute plethora of machinery, space, energy, the whole lot, and they probably were far too levered. And I would say that it's just youth, as in inexperience, that's got them caught out here. So you can see they actually dropped 80%. I think they dropped like 60% in the course of after hours trading. And what Charles Edwards here shows is that the world's biggest Bitcoin miner is going bust, basically. This is what happens when Bitcoin trades below its production cost for too long. And you can see then, we looked at his hash ribbons chart before, production cost. You can see the variance there. When it's red in the top here, this is, everyone's losing money basically underwater. So on average, it's a costly exercise for Core Scientific, and they sort of sensed trouble a little while ago, because in June they sold 7,202 Bitcoin that they'd mined for 167 million. Now, you can see in this chart by Luxor that they are the biggest by percentage of hash rate. They're almost 5% of hash, and Marathon and Riot and some of these other companies, Hut 8. These guys have been around for a very, very, very long time, and they know the game. They know that you've got to rotate your machinery, own it for a couple of years, sell it at a nice high period of time, let the FOMO soak up your high price, keep stacking Bitcoin, keep your operating expenses really low, always have a 50% cash balance, like a really high cash balance so that you can draw on that, blah, 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 blah. It's just a game the whole time of balancing to prepare yourselves properly for the time that we're in right now. Because this business is triply volatile, and you've got to be very smart. Now, Will Clemente here says, remember, Core sold 7,202 Bitcoin for 167 million in June. They now only have 24 Bitcoin left. They're the largest public Bitcoin miner in terms of hash rate. And he obviously says here, wish no harm to anyone. But at least if they go under, they won't have to sell anymore. They won't have to crash and dump Bitcoin just to keep themselves alive. So what will likely happen in this, and this is the perfect free market that we're looking at here, these machines will go offline. They'll get redeployed across the rest of the well, not just the rest of these public miners, but the rest of all the miners, the machines will get turned back on and off we go again. And there's just zero impact to Bitcoin. Bitcoin does not care. It is just an incentive machine, incentivizing these people to dump billions and billions and billions into mining technology growth, energy capture technology growth. It's just a beautiful thing. This is the Bitcoin. I've said this last week. Incentivizing energy technology growth. This is the only thing that's ever done it. And so, let's see where we can get with that. So the miner mag here really does show how loose and how fast Core Scientific were growing. It's sort of kind of frightening, actually. They had a truckload of Bitcoin on their balance sheet, and their debt to equity ratio was, pretty hectic. And when your one revenue stream gets cut by, not cut, but basically the value of your revenue stream gets cut by 70%, and then likely your interest expense gets pushed up as well, things are going to get tough, and it's just the way it is, quite frankly. So if you see this here shows how to understand this take better. Take a look at Cores when it is plotted against Marathon, which is another big miner, very experienced. It's down 95% since Bitcoin's June low. So this is a very clever chart to look at, and it shows that there's every chance that some of these older miners have actually been squeezing the rest of the market intentionally. They would have known how much leverage some of these bigger players like Core have taken out, and they know that if we can squeeze that price and we can push the hash up and really make it painful for them, they're going to go under. We're going to get more hash, we're going to get cheap machines, we're going to do this, we're going to be able to take over their enterprise. It's perfect. So this is great. This is free market stuff happening right in front of our eyes. And so Mara is a old battle-hardened company who can weather the bear market. That's the key. It's not about the highs. And with your investing in Bitcoin, it's not about the highs. It's never about that. The high day lasts for one day. The rest of the time, you're fighting emotions and trying to deal with the bear market. So it's a game of patience and control, self-control. So just take that into consideration. And really, I wanted to wrap up this little mining section here with this one chart. This shows, so this is how much new hash has come on, combined with the price drop. Miner revenues are effectively down 79%. And then on top of this, we've got a halving coming up in 2024. I mean, shit. These guys need to be rock solid. It's not even funny how tough their business is. I'm sure it seems great and gravy-like, and hence why everyone tries to do it in the good times, in the FOMO boom sort of months of Bitcoin going to a new all-time high, and then, all of that phase. But every other time for the next 4 years, she's a tough game. So, good on them for expending so much capital and continuing to expend capital. Someone's got to do it, and that the people that do it do get the rewards. So, may the best company win. That's all I can say. This is a really interesting short clip. It's only a minute and a bit, but this is Eric Voorhees. If you don't know who Eric Voorhees is, you need to go back and look at some of the really early stuff on Bitcoin. He is a libertarian from the beginning. He's one of the OGs, really true, well and truly. He actually features in Bitcoin Billionaires, the book, as part of the early introduction for the Winklevoss, kind of. They got involved with him somehow. He's a very smart, interesting guy, eloquent. And his mantra and his ethos about Bitcoin or crypto has maintained itself the whole time. He hasn't wavered once from his beliefs. And what happened here, he's having a debate against a guy called Sam Bankman-Fried, who owns FTX. This guy is a nerdy sellout geek con man, quite frankly. What he has proposed is he's paying tens of millions of dollars to lobby politicians to get certain regulations put in place or certain laws about crypto that realistically only benefit him. And he's trying to convince the community. You can check it out on Twitter. There's heaps of threads on this and his own threads explaining what he's doing, which he doesn't really know, I don't think. But basically he wants everyone in the industry to suffer, all of the people, the consumers, us, the plebs, with having to deal with overreach and regulation just so that he can thrive in his business. Now, as Eric Voorhees is saying in a very polite way here, which you're about to hear, he's saying, fuck off, Sam. And Sam's ruining his reputation in the whole industry right now in front of our eyes. And this is a classic thing in crypto. You become the hero and then you get slayed because you're a fucking greedy bastard. And this is what happens. Don't be a greedy bastard. Stick to the ethos of why this industry is around and you'll be fine. So listen to the interview, listen to it carefully, and listen to Eric, and he catches Sam out. Sam is, this is so telling. It's so telling.
Those of us in this ecosystem, this industry, have created essentially a new financial foundation for the whole world. This is a huge responsibility. And the entire purpose of this financial foundation is that all of humanity can use an open, immutable financial layer. We are separating money from politics. We are separating money from the state. And in the same way that the church was separated from the state and everyone now hails that as one of the greatest things that humanity ever did, we now too, it comes to us to do the same for money. Money is as or more important to people than religion is. We interact with it every day in all sorts of manners. And just as mathematics or language are immutable and open to the entire human race, so too should the exchange and management of money. That is the principle that makes this entire ecosystem important. That is the principle that justifies everything that we do. And if we lose that, it will be something that we regret for the rest of our lives because we had that opportunity.
Okay, so quickly, we set the scene of Eric. You understand his passion. He gets it. He's very first principle based on this. Now, so this is Sam Bankman-Fried now. They're having a little debate and Eric asks him some important questions. And just watch this counter discussion. It's unbelievable.
If that did mean that, essentially, suit front ends by Americans targeting American retail had to be licensed, I think that could be reasonable.
Sam, if the question was, let's acknowledge that the email protocol will be permissionless as a protocol.
Yep.
But it was the law of the land in America that every email front-end provider required KYC from its users.
Yep.
Because under the justification that we do not want people sending information back and forth with terrorists.
Yep.
Where would you stand on that position?
Oh, I'd be strongly against that position.
Why?
Why would I be against it? Because I think it'd be against freedom of speech. I think it'd be disenfranchising a lot of people. I think I would not trust in practice that it would do a good job. So I agree with you on all of that. Okay. I'm making a distinction here between, for instance, payments versus derivatives contracts.
Why is Aave somehow different than email?
So, why is it different than email?
You argued so well and so passionately to not block email with licensing and KYC. I loved hearing that.
Yep.
That filled my soul with joy. Such good arguments. Why does that not apply to financial transactions?
So, why does it not apply to financial transactions? I think there are a few things here. So, first of all,
so he really caught himself out here, Sam. And Eric's point basically was this: we want as much open freedom as possible. And I'm going to get into a central bank digital currency discussion or more detailed video fairly soon. It's coming together quite well. But this is why we need Bitcoin, because we want financial inclusion for everyone in the world, wherever you are, whatever your circumstances. We don't want a dictator. We don't want an overreaching government. We don't want socialists. We don't want fascists. We don't want anyone standing in the way of the individual and their right and, quite frankly, their freedom to do what the fuck they want with their money. It's absurd. Tracking people's payments is absurd. And as Eric said, imagine if you had to KYC every email. Now, that would have destroyed the internet, quite frankly. When the internet was first started, if that happened, if KYC, this was a big case actually at the time, because it turned out to be freedom of speech. They couldn't do anything about email. But if that got KYC'd and had intermediaries, much like money does now with the fucking banks, it would have crushed the internet. The internet wouldn't have been in existence like it is today. The internet is free, open speech. And money needs to be free and open as well for it to thrive and survive. People deserve that. As time progresses with Bitcoin, everything goes down. Now, when you're measuring everything on the planet against like devaluing currency or just new monetary units effectively coming in, everything's down. Your house, you feel awesome because it's likely if you own a house, it feels like you've gone up in value. That's actually not the case when you're measuring it in the correct unit. And that unit really, you could measure it in balance sheets of the Fed and you're going down. So that means it's worth less units. Or you can measure it in something like Bitcoin and everything's just getting crushed, quite frankly. And it's a really important thing to remember. If you can do some holding of Bitcoin for 10 years, say, or 20 years, your purchasing power is going parabolic. It's going through the roof. And there's a lot of folks in the industry, and this is for America, that are still, in true belief, and I probably think they're going to be proved right, that one Bitcoin should be able to buy you a house. What sort of house, I'm not sure, but it's certainly the best way to protect your money. It's certainly the lowest counterparty risk. And yeah, it's just a no-brainer. So what do you expect? What do you think? The data doesn't lie. So I'm going to leave you now with a Michael Saylor sort of, how would I call it? Cut little clip. It's really, really good. And I think it's worth watching. It's a good one to share if you want to share it around. Thanks for watching, guys. I'll see you next week, definitely. Stay well. Share the video, like the video, do your thing. And we will see you soon. Cheers. Bye.
With every other asset on Earth, anything else you can own, houses, gold, silver, commodities, stocks, bonds, when the price goes up, the supply increases. If I increase the price of any stock by a factor of 10, the company issues more stock.
Of course.
Bitcoin's the only thing in the world that's inelastic to price. If the price of Bitcoin triples, you can't make any more. If the price goes up by a factor of a million, you can't make any more. In engineering, there's something called conservation of energy. And the whole point of conservation of energy is energy can either be made or destroyed. There has to be conservation of it. The mathematical metaphor and mathematical analogy to that is proper math. 10 plus 10 equals 20. 2 plus 2 equals 4. If 10 plus 10 ever starts equaling 18, you got a problem.
Yeah.
If you have a swimming pool with a leak, if I have an electric system with a short circuit, if I have a leak in my engineering system, nothing works. Nothing in the world of ocean engineering, aeronautical engineering, electrical engineering, nothing works unless you respect conservation of energy. The problem with inflation is inflation does not respect conservation of energy. I've got a leak in the system. I've designed a currency which is not conservative. So properly understood, if you said, I want a conservative money supply, a conservative money supply would be there's $10 billion in the economy and nobody prints anymore.
Right.
And that's the Austrian economic sound money principle. Bitcoin is a conservative monetary system. It's the first system that respects the laws of thermodynamics, and the laws of physics, and the laws of math, which means it is true and pure. It has integrity. If you have integrity, if you have something which is true and pure, and you have durability, then you can build a family around it, a life around it, a company around it, or civilization around it. Steel is concentrated energy in metallic form. You ever walk in a steel plant and you look at the energy going into steel refining? Yeah. It's concentrated energy. The history of the human race is the civilization that channels energy most effectively always wins. Steel trumps iron. Iron trumps bronze. Bronze trumps rocks. Bows and arrows trump the guy with the spear. The guy with the spear beats the guy with the knife. It's always a matter. If you have air power, you beat land power. Sea power beats the army. And nuclear power trumps everybody. And so if I have steel, I have concentrated metallic energy, I can create a skyscraper punched up 100 stories in New York. How long will it last? 100 years. How long will a steel ship last? Longer than you will last, as long as it doesn't corrode. Wooden ships? Not so much. Wooden ships rot, right? You want to build a building and punch it up against gravity and hold it 100 years, you need concentrated energy. If you want to build a trust fund that'll last 100 years, how do you save $100,000 for 100 years and give it to your great-grandkids? You put it in the US dollar, you use 99% of your economic energy. You put it in gold, gold supply doubles every 30 years. The gold bankers keep inflating the gold. Maybe you lose 90% of your economic energy. But that would be a lucky happenstance because just about every country on earth seized the gold from their citizens in the last 100 years. Everybody, even the US, they take your gold.
Yeah.
So you want to save money for 100 years. You can't do it with currency. You can't do it with gold. Which company is going to be around 100 years? You want to put $100,000 into real estate in Florida? Can you buy $100,000? Let's say you could. 2% tax, 4% maintenance fee, 4% of $100,000, $4,000 a year. Your money's not going to last 100 years. How do I preserve my property, which is economic energy, which is capital, which is money? How do I preserve that? I need something harder, more durable. I need a steel. I need an economic steel. Steel is concentrated metallic energy. Bitcoin is concentrated digital energy. It's energy in digital form. I eliminated the friction on energy. What's the half-life of energy? If I take a megawatt of power and I sell it at 12 cents a kilowatt hour, I have about $1 million. Okay, I'll give you $1 million of electricity. How long can you hold it in a battery? You lose 2% a month. You can't hold it very long. You're going to lose 24% depletion rate in a battery of electricity. How do you send $1 million of electricity from New York to Tokyo? You can't. You can send electricity 500 miles over a power line, you'll lose 6%. Send it 10 times, you'll lose 60%. Doesn't move. Convert that energy, that electricity, into digital energy, a la Bitcoin. You upgrade it. If you were to convert a megawatt of power via a Bitcoin miner into Bitcoin, you'd have about $5 million worth of Bitcoin. You can hold it forever. You can send it to Tokyo for a nickel. You can put it in a trust fund. Bitcoin's going up 170% a year for a decade. The S&P 500 index is going up 14% a year on average for a decade. Gold, it's flat. It's not going anywhere. It's getting demonetized. It's a dead rock in a basement. It's not fast enough. You can't put gold on an iPhone. Gold's getting depleted, inflated, and manipulated away by the bankers and the miners. So Bitcoin is simply pure economic energy. These engineers, Satoshi and all of Satoshi's compatriots, what they did is created an engineered monetary asset on an open, permissionless network that anybody could participate in. Any country, any company, any individual. You don't need a bank. You don't need to ask permission. It is the ultimate egalitarian system.